Welcome to Markets Now. I'm Michelle Rook with Brian Doherty, Total Farm Marketing. Well, as far as the grain trade on Friday, corn and wheat, lower soybeans to the plus side, and the cattle market saw a bit of a rebound as well. Let's start off talking about just the general complex grains. It looked like we were reversing a lot of things, a lot of profit taking end of week.
Yeah, end of week, a little disappointing if you're bullish because we were kind of hoping for that breakout to the top side to really put an exclamation mark on a really strong reversal early in the week. That didn't happen. Wheat led the way lower. Corn has a lot of deliveries to work through here in the next week or two, so the pipeline's probably full, and the end user still doesn't look like they're really hard chasing this, but nonetheless, it's going to be a good technical week for corn as we post what we call a hook reversal upward. And moving into the springtime period with the uncertainty ahead of the markets, both in the southern hemisphere and northern hemisphere, should be a wake-up call to end users to take advantage of a lower price.
So Brian, you and I talked about a couple weeks ago all of the liquidation that was done in farmer selling going into option expiration, right. First notice day. With that out of the way, do you think we've turned the corner now and put a bottom in the corn market?
Potentially. I'm gonna kind of put this analogy that we've got a coin, and on the one side we got the farmer with the grain, and the other side we got the end user and the speculator. End user buying only what they need. Sellers in the speculative interests are continuing to pressure the market. Farmers have to move the grain or make a decision. Now we're turning that coin, but it's not quite turned all the way where the farmers can hold off on selling. End users should get more aggressive, and we're hoping that the speculator decides to start moving out of the market and price more uncertainty in with actually growing the crops both in the southern hemisphere and northern hemisphere.
So the wheat market, you said setting back here, and fundamentally was that because we continue to kind of follow these European prices?
Yeah, it's tough for wheat to really rebound without across the board strength worldwide, and what ends up happening is you've had this at the end of this week, weakness in Paris milling wheat, lowest value in a few years. You get sell stops triggered in the market, and you've got Russia continuing to push wheat out at lower values to the world market. So we haven't quite turned that corner in the wheat market. It looks like good consolidation on the charts, but a pretty rough end of week. Still, consolidation, not anything to panic over yet, but just don't have any bullish news to kind of feed the bull right now.
Yeah, little pop in the soybeans on Friday, and of course we had heavy deliveries on Thursday. It looked like that pressed the market. So yeah. Was it just short covering on Friday?
A little bit, and that's old news. So once you get the news behind the market, it searches for something else. And I think there's just enough weather uncertainty out of Brazil in different pockets where you could maybe make the argument that the crop is stable or maybe deteriorating a little bit. So there really isn't, the bulls don't have a lot of fodder, but the bears don't either. They've already pushed that into the marketplace.
But we did hit new contract lows this week, and do you get the sense that because we still have Brazilian harvest pressure hitting the market, they're still at a lower price than the U.S., that's going to be a headwind for us?
That is a headwind, and it has been a headwind, and the market moves on perception. The perception is that Brazil will have this pipeline of beans available to the world market, and we don't have enough uncertainty with the crop currently. Now the crop, private estimates are down around 150 million metric tons. Remember, it started out about 165, so the crop has been reduced in size or shrunk, but as of late, it's more flatline out. So we'll have to see. It's still weather market, still weather event, but it doesn't seem like it sends a signal to the end user to get in and aggressively buy, and we see that in the weekly export numbers.
Cattle up today, obviously end of the week, maybe some short covering, but it looks like we're going to have a lower weekly close. So are you concerned we're going to see more consolidation in that market or not?
Maybe. I still think we got a bull story in cattle based on the supply side, so it's whether or not demand can pull prices back up to the levels that we saw late in September when the market peaked and took a slide. When you look at big picture, supplies are limited. Weight gain has been good. Cattle are moving through the feedlot. There's not a lot of story to be negative cattle right now. In fact, I might argue the story is still bullish cattle. We just don't know if the consumer can continue to chase the market or push it higher. That's the real test. We know the supply side is limited. It's whether demand can keep up. This week, it looks like just hearing in the grapevine and seeing the numbers we see and listening to the Federal Reserve, interest rates may not be on the decline anytime soon. So that's a little bit of a headwind.
I want to talk one last question about the money flow and the funds in the market. They've been buying livestock. They've been short. They're record short now in the entire grain complex. Have they extended that short position long enough? And do you think we're going to start to see some reallocation here at some point?
So if you study that historically, you have trends and cycles. And the net of what you said is very true. all-time record shorts. And when they've been in this position before, typically the market is pretty low. So for them as investors, they have to ask themselves, is it worth the risk to continue to sell? Where do I expect the market can go down to that's worth the risk? Or should we start reversing that position and buying value? The equities have been in an uptrend for 6 months. Maybe there's a point here where they start to weaken and the money flow moves back into row crops. Now that you have to really, kind of put your money where your mouth is, we have to produce the crops. It's one thing to assume good crops, we still have to produce them. And usually that gets end user buying a little bit more aggressive just in front of weather markets. They're securing their needs. Why take the risk?
Okay. Well, money flow is always interesting to talk about, but it does obviously influence our markets.
It certainly has this year. The money flow has been very short corn. The new farmers had a lot of it unpriced. I think they just added their short positions. And like anybody else, if you're doing something that's working well, you continue to do it. So if you're short the market and your account is growing, you're going to short more. It's telling you to continue to sell until somebody tells you not to. And maybe we got the signal this week to tell them no more.
Always a pleasure to see you. Thanks so much for joining us here from Commodity Classic. Brian Doherty with Total Farm Marketing. That's Markets Now.